Gopinathan, CEO of TCS, and N. Ganapathy Subramaniam, Chief Operating Officer and Executive Director of TCS, to walk us through the way forward for TCS for the quarter gone by. Doesn't matter if there was a little bit of miss or questions marks are being raised for the quarter gone by. What really matters is that both Rajesh and Ganapathy, they're joining us on a Monday morning, and I can see them smile. So good to see that you both are smiling.
Hi, Nikunj. Good morning.
Rajesh,
morning, Nikunj.
Same time last year, there was a huge tailwind which the sector was enjoying. Everything was just going like a dream. Huge uptick in digitization, spending on cloud, and a new wave had started. But this time around, there are concerns. There are headwinds, and there are macro headwinds which are beyond your control. But Rajesh, the problem with these macro headwinds is that they will impact performance, they will impact profitability, and margins have got impacted. Paint the big picture for us, because these are not the numbers which I am accustomed to in terms of TCS.
Nikunj, once again, good morning and great to be here. As you said, same time last year, actually we were coming off a pandemic. And rather than tailwinds, what was not there was no headwinds. And we continued to be quite confident about our ability to execute. And that's what we had spoken to you about. Into this year, we are riding on a very strong year of 15% growth. And I'm very happy that we have actually executed on this quarter, continuing that growth momentum at more than 15% year-on-year growth. As we look forward, the larger environment, what matters for us from a performance perspective is how do we deal with it? And I'm very happy with the way we have been able to execute through the quarter. As you know, this has also been a quarter where we have rolled out an industry-first unique new dimension to our overall operating structure. And that has also gone in quite smoothly. So net-net, quite happy with where we are. We are well positioned to be able to capitalize on both growth opportunities and to deal with any challenges that might emerge on the horizon. So very happy with where we are.
Rajesh, but the situation is evolving, which is we don't know whether for US economy is going to be a hard landing or a soft landing. We don't know what will happen to Europe. And historical experience has been that when there are such big macro challenges, it has impacted IT outsourcing. I'm going to spend some time trying to understand from you, because that is the comment and that is the picture which we want to understand from you, Rajesh.
Because actually, every time there are challenges, they come in different shapes and sizes. The context is very important. If you think about the last two major headwinds, I'm not saying that we are heading into something of that magnitude, but whether you think about the pandemic or if you think about the financial crisis before, both of them were characterized by a very sharp downturn and an unexpected and sharp downturn. Whereas, as you look at what is going on around us right now, this is if a downturn were to come about, this would be the most telegraphed downturn ever in our memory. So the way companies react to it will be very different than the way they have reacted to the last two downturns. And you see that in our own business. We are positioned, as I said, to be able to move in either direction, staying very agile. We are going in with the bases loaded, as it were. We have significantly invested in building up capacity last year. And currently, we are well positioned to be able to handle it. And as whether the growth continues, accelerates, or if there is a downturn, in all three scenarios, we are very well structured.
NGS, good morning again. NGS, at the beginning of the year, it was almost granted that TCS will register a double-digit growth. Based on the numbers, what you've reported last Friday, I won't use the word concern, but some hesitation has come in that will TCS clock double-digit growth this year?
Good morning, Nikunj. I think, as Rajesh mentioned, we are quite happy with the way that this quarter panned out. Overall, the growth of 15.5% year on year, augurs well for the coming quarters. Second is that the deal pipeline and the TCV that we have signed of 8.5 billion for the quarter is also looking good. The North America has registered about 4.5 billion in TCV. Banking financial services has registered 2.6 billion in total contract value. Retail and consumer goods vertical has grown by 26% year on year. So all that, means that we are in a good wicket in an environment where there are certain macro things which are happening. But then as far as we are concerned, we are focused on the long-term investments that we have to make to stay relevant to our employees, to stay relevant to our client base. In the short term, we don't see any of these headwinds, so to speak. We have, both Rajesh and I have met with several clients in the last quarter. Many of our clients are also visited our facilities. They all believe that technology is a staple for their businesses, and it is important that they continue to invest in technology to be resilient and to participate in ecosystems and the growth opportunities. So from that perspective, I believe that we are in a good wicket, and I think, getting a double-digit growth for this particular financial year, I don't see it as a problem.
I just want to put some context for our viewers here, which is that when post-COVID, when growth came back for TCS, I specifically asked them that, is it sugar rush? They said, no, this is not sugar rush. This is cloud transformation and digital transformation which is happening. Right now, markets are worried about macro challenges and what could happen to client budgets in the light of the world slowing down. But you've heard both from Rajesh and NGS, and this needs to be marked that they don't see any problem. And the headline is that they don't see a problem in double-digit growth. So NGS, every brokerage in the town is getting overly obsessed about margin band being broken for TCS. Is that a genuine concern?
Given our numbers this quarter, I think they have the right to be questioning that. But then, we always feel that, look, this particular quarter is in which, we have 150 basis points of impact for the salary hikes that we have given across our employee base, number one. Number two is that because of the subcontractor costs that we had to continue to invest in executing our projects. If you see, all the work permits and visa appointments, etc., it's taking, anywhere between 8 to 12 weeks, or sometimes it's even 4 months before we could get an appointment in the embassies to get our people across, right? The good thing is that it's happening, the appointments are happening. So in the short term, our subcontractor cost for this quarter particularly has gone up, right? And even the lateral hires that we had to go in for a higher number of hires than what we normally do. So because of all this, there is the margins have got impacted slightly. But then we are all the levers that we have on hand to ensure that we get back to the 25% margin band as fast as possible, and then be in the preferred range that we normally operate in.
So Rajesh, in order to go back to the historical margin band which TCS has enjoyed, what are the immediate steps you are taking?
You heard what NGS laid out. We are very focused on executing on this path. As I said, we have over-invested in capacity last year, and we recruited more than 110,000 odd freshers last year. As the capacity comes on stream and continuously becomes more and more productive, that will give us a fair amount of support. As more business travel normalizes, we believe that we'll be able to rationalize some of the other cost structures that are a play on inability to move talent across to where the requirements are, and more availability in very local market scenario kind of issues. So many of the headwinds that we see on the structural cost base are, I believe, transitionary in nature, and it requires strong execution. It is not a trivial task. But that is what TCS's core strength is. So we are quite confident about being able to execute on that and to maintain that trajectory. As NGS said, we will be targeting the 25% first, and then onwards to our plan of 26 to 28. So we don't see any major breakdown of the profit structure of the industry, and our relative competitiveness, if anything, has only become even more stronger.
What are the chances, Rajesh, that we may see you going back to the historical band, margin band in this year itself?
That's a very leading question, so I'll let it pass.
But if I connect the dots here, why do I get a sense that you will be able to achieve it? Because NGS is sounding confident and you're also giving me a good guidance. I'm simply putting two and two together based on my experience of interacting with Rajesh and NGS.
Leave you to be the best judge of that, Nikunj.
Rajesh, but specifically on Europe, specifically because we don't know what the shape of the economy is going to be. Europe is a large business. What are the client engagements indicating? Is there a concern or is there still strong commitment?
Europe, as you know, has been an area of strength for us for many years, and our client relationships, client conversations continue to be very, very positive and very constructive. Clients believe that the relationship is strong and that we are the solution to many of the challenges that they face. But the overall environment requires close monitoring, and there is naturally, for good reason, many of them are worried about what they see around them. That has not started directly impacting projects at our level so far or the demand pipeline, but it would be prudent to remain cautious and see how it plays out over the next 6 months, where multiple forces are at play, which are large and unpredictable. So they are cautious, and we remain also quite vigilant as we look at it.
Unjay, just to get the messaging right, and I'm going to take the clock really back and remind our viewers of a lovely comment from Rajesh, which is that a new cloud transformation cycle has started and this is a multi-year cycle. Based on what I've heard from you and Rajesh right now in JS, I'm assuming that that big call of cloud transformation and a new cycle which has started, that does not change. So market should not get worried about Europe or China or what is happening in US.
Absolutely, yes. This is exactly what we hear from our clients. In fact, we asked specifically this particular question, you are posing it to me. Most of them felt that, look, this journey towards cloud is irreversible. And the investments that we have made in terms of the Horizon 1, Horizon 2, Horizon 3, that's the journey that they all have to go through in order to be complete and be resilient and set themselves up for future as they all reimagine their own supply chains and then work around participating in ecosystems and curate their own customer journeys. Right? So in that context, none of them have told us that there is any rethinking on the investments that they have committed with us or they are planning to do. And that augurs well. I think, it's a multi-year transformation journey and there's no point in stalling it halfway through.
NJ, just to also get a sense of the pricing trends when you're talking to clients, you've indicated about the demand. What about the pricing trends? Will they be as firm as what they were immediately after COVID?
The demand environment looks good. Pricing for certain niche skills and technology skills are good. And we are seeing an uptick on the pricing environment overall in terms of the transformation programs that we are executing, whether it is related to cloud, whether it is related to data or artificial intelligence. In all these areas, we are able to command a premium pricing. And that's a journey that, we'll have to look at it, as I always mentioned, is a combination of several factors in terms of the portfolio of clients that we have, portfolio of project mix that we are doing. But overall, in the areas where we want to see a pricing uptick, we are able to get that pricing uptick, Nikunj.
Rajesh, just to wrap it up, the terminology I used immediately after COVID to describe TCS profitability and business was exciting. will it be cautiously optimistic now, or it is still exciting?
It's still exciting. I mean, some of the excitement is coming in areas that we would prefer not to, but it is still exciting.
Wrap it up, Rajesh. I mean, we should not. So, your message is very simple. Don't read too much into the performance for the quarter gone by. Yes, there are headwinds, but the big picture commitment, both in terms of demand and trajectory, and your ability and your commitment to come back to the margin band, I think is robust.
Absolutely, Nikunj, spot on.
Well, thank you very much, gentlemen. It's good to have you on Monday morning and good to see both of you smiling. So what brokerage is saying, anything else? But trust me, I've tracked TCS for years, and the ability to come back, I think, is something unreal. And I just want to remind our viewers that one blip also happened after the second wave. But look at the way how TCS came back. So that's a polite reminder of the ability of a great company like TCS to really withstand a storm. Gentlemen, thank you very much and have a great day ahead.